Traders, welcome back for part 3 of this short series I'm doing on trading approach. Today, you can see here in the italicized, we covered these parts, these things, these items in videos 1 and 2. Today I'm going to talk about the scanning approach, just the general approach I take, show you the charts, show you kind of how to go through a process of this for tomorrow. Tomorrow's trading based on what happened. The markets are now closed today. It's about a half hour since they've closed. And we had a pretty good sell-off toward the tail end of the market, so we'll take a look at that closely. But just kind of what I go through thought process-wise with regards to compiling a list to revisit pre-market, typically around half an hour before the market opens. I'm checking these are my top names to look. And again, a lot of them may not materialize in anything worthwhile, but you're setting yourself up for success by having these ideas pre-scanned the night before, so you have kind of a focus list to look at, as well as looking at other things. So I'll add that to the, in fact, I'll add it right here now. There you go. I added pre-market process. So the scanning approach is done after the market. Obviously, you could do it in the early morning hours before the next day starts, or you can do it in the evenings, typically when I do it, and then the pre-market morning process is you revisit that list that we're going to come up with, and then you also look at gappers and news. So let's get right to it here. All right, you will see my TradeStation platform here with all of my different time frames, daily up left, 60 up right. These are the two focused ones we're going to focus on. Weekly here in a blue kind of background because it's kind of just as a reference, and then the 15-minute chart here, and then the 5-minute tucked behind here, but we won't really use that for scanning for ideas for day trading for tomorrow, as well as swing trading for tomorrow too, and the rest of the week. So I'll generate ideas in my swing trades and follow them for a week at a time, typically, some longer than that, depending on how they're materializing or how they're acting after I get them on radar. So we talked about establishing your universe. This is my universe of stocks as it is now. You can see there's a ton of stocks. They're sorted by the largest percentage loss today, all the way up to the largest percentage gain here. Where good old ONTX gained 70% today, and I'm not in this stock. And wow, look at this thing go! Remember, I think I talked in the last video. I talked about getting rid of this from my universe. I didn't yet, and I was interested in buying it actually when it was in here in the $1 area. Now it's at $1.08 after going all the way down here, and so now it's interesting again. But not going to buy it after a 70% up day. Today, right off the bat tomorrow, but I will be revisiting this from each time I do my scans. I'll look at it and see what it's doing. So let's talk about SPY. So what we're looking for here on the scans is stuff with tradable void. So what is a tradable void? A tradable void is where prices have moved previously to the left. So always look to the left on the chart because that's the past, right? The most recent bar formed on the daily chart. This is the daily chart here. This is the last 60 minutes of trading here. Last 15 minutes of trading here. Current week's trading in this little candle here that's not finished. Previous week's total trading here. Looking kind of like a hanging man. And as I mentioned, I am short the SPYs, and I am long the VIX as a hedge in general to some of my long positions, but I'm also just feeling like we're going to get more downside. Like I said, I think the SPY is going to come down here to, could easily come down to the 400 range. Maybe not this week, but I think in just a normal retracement, come back and good God, at least touch the 20-period moving average, which it hasn't touched since November of last year. So, it's been pretty much above it the whole time. I think it's overdue for a correction. Hence, we play the odds here, and things are looking like we're going to pull back even more. So what you've got here is a perfect example here on the 60-minute chart. You've got the 60-minute chart candles, and you've got to move up. And you'll notice here that the move up from here, from 408 to about 417 and change, was pretty seamless, meaning there's not a lot of overlapping candles like there are here. Look at this big overlapping bar after bar where 50+ percentage of the new bar is engulfed within the previous bar. That's a consolidation. That is not a tradable void. Typically there's a lot of resistance or support in those areas. And when you get a move like this, then you've got less support or resistance in those areas. So assessing the 60-minute chart, because if you revisit it, if you watched my video, the last video I did with about the 60-minute charts being really one of the key charts for me in regards to establishing day trading ideas for the next day, as well as swing trading ideas for the next week or two. This really the staple that I go to at this point. Now it wasn't that way all the time, but I've kind of gravitated toward this based on experience. And the daily chart also coupled with the 60 to me is a potent combination for finding ideas. So Let's just talk to what's happened here on the SPYs. Well, SPYs has gone up, up, and up. We know that. And it's been kind of grinding along here, and it made a new high, immediately got rebuffed from that high, made a new low, took out all these lows, retraced about, look, 60% of that move, kissing back up on the 20-period moving average, which is flattened out here on the daily. And now we got this bar here on this aggressive red candle on volume at the end of the day. I mean, massive volume. You know, the entire day's move was in the last 15 minutes. We made the move that it made over the previous whole day's session, pretty much. And what do we have here now? Now that we've breached the lows, we've got all this overhead now resistance, okay, that could prevent prices from going back up above 416. Hence, you have something to plant off of from a short perspective as well as here, okay? Now, you are going counter trend. We are still in an uptrend, folks, on the daily, even though it's wavering here. It's starting to get, shaky legs. And so, sometimes to make the biggest profits, you have to front run, the setups. And I noticed that I have. But the danger is if you're new to this game and you're front running setups, you're liable to get crushed because you don't have that sixth sense, that experience speaking to you to help you kind of make these decisions. And you may be less apt to take your stops when you're wrong. You got to take those stops, kids. Got to take them. So no tradable void here between about 415 or 414 and 416 because of the garbage in here. But you see the nice tradable void down. Now we've breached that void, okay, and we can really roll down to 408 without a whole lot of resistance. And then you've got a V bottom here and another support area possibly at 408. So it'll probably have some trouble at 408. And of course you've got the V bottom at about 405 here from this candle here where it sold off on volume, which may find buyers to step up and support prices if and when they get down there. So tomorrow, I like the SPYs as a short watch on the day trading basis. You could swing it short, but again, you're going counter trend, which is more risky. That's another subject for later. But it looks like we're going to go lower. Now, if we open flat, that would be the best situation. Or even if we gapped up slightly, maybe into this resistance area around 414, say 413, we gap up in this area here, languish like this for a little bit, and as soon as the wheels start coming off that automobile, hit it hard, okay? But have a stop, because you'll see if you go back through all sorts of charts, you'll see all sorts of charts that show this consolidation, this lack of a tradable void, if you will, does not stop prices from cutting through it like a hot knife through butter either. Okay, you're playing the odds. Nothing works all the time. Each moment in the market is unique. It's never like anything in the past. Okay, there's different forces, different traders involved, different volumes, different share sizes, different news events. Each moment is new, fresh, brand new. Hasn't ever been in a moment just like that in the past, in my opinion. So keep that in mind, that just because you have a tradable void doesn't mean it's going to move through it seamlessly. Just because you have a bunch of garbage and a resistance or support point doesn't mean that support point or that resistance point is going to hold. There are tons of examples of that exactly not happening. But what do? We have to play the odds, and we have to be looking for something that works more often than not, in my opinion. Okay, that's how I set targets and set those, 3-to-1, 4-to-1, 5-to-1 reward to risk ratios based off of tradable voids, extrapolation targets based on if you're venturing into an area where prices have not gone before, whether it be on the low side or the high side, using those concepts. So SPYs, this is what I'm looking for tomorrow. It's a great shorting opportunity, I believe, if it comes down here, if it opens up flat or maybe slightly higher. If it gaps down, well, what do we have if it gaps? Say it opens up at 411 tomorrow. Well, it's already extended down from 415 to 412, right? And if it opens up another dollar, the chances of it popping back up, I think, are pretty high, okay? Unless there's some news issue that comes up and people start panicking right out of the gate, which could happen as well. But I'd be less apt to, I'd let things kind of settle in for a few minutes first before I start taking trades, okay? You've got to have a process. Obviously the smallest chart I would say that you can trade consistently typically is a 2-minute chart. 1-minute charts in some occasions on real Momo type situations, but they can be dangerous because they're quick, and unless you know what you're doing with your entries and your exits, you can get scathed. You can lose a lot more money than you expected to with regards to your risk. Okay, so keep that in mind. But I like the SPYs as a possible short. Let's look at the sister here, the QQQ. Very similar, right? Big move at the end of the day. Now, no, look to the left though. Right here, we've got support on the Qs, right? support. It didn't even take out the low of the candle here, whereas the SPYs is weaker. Also, look at this though, on the weekly chart it's weaker because it's actually under the 20 period moving average, which is not in the SPYs, right? Just like I showed you can go back in the video. So this one is generally weaker on the longer time frames, but stronger on the 60 in a sense that it's holding. But if it breaks this low, right, you've got a tradable area here down to about 318 where there's now support at 318. So same concept, watching it for a short opportunity depending on where it opens. Now, let's paint this picture. What if tomorrow you wake up and it is now printing, it's gapping up to say 329, 330, above all this stuff in this big sell-off? What would your bias be early on? Well, my bias would be, for the first hour anyway, more to the long side until the candles tell me different, because you've got this big move down. You've got a shock to the people who are short. You've also got people that may have sat through this long, right? They're going to counterbalance this because they're like, oh gosh, here we go. We're going to go back down. I need to lock in my profits. My Bitcoin isn't faring too well. I need to lock in some profits. And when it gaps up there, where they're going to be sellers, right? They're going to be, oh, thank God, Christmas came early. Get me the hell out of Dodge. And these people up here, again, the shorts may be buying like crazy, going, oh crap, here we go, another move back higher. Because in general, we are down three weeks in a row, right? So you can really mind what yourself when you go through all these scenarios and you start thinking and trying to give reasons to why people are doing things. Relax, take a deep breath, look at the chart will tell you what you need to do, and follow it though. Don't let your watching of the news, if you want to call the news, or Market Watch, or FinViz, or Kramer, or the Fast Money people, or the Fox Business people, any of them, and stories that are written on the internet, you can really screw yourself. That's why I like the charts, because it's objective. It's objective. Does it work all the time? No, but at least it gets you out of trouble. And if you get to your loss points, if you've established what you're willing to risk on this particular idea, and you follow your plan, you will not get hurt, all right, as badly as you would if you did not have that. Let's put it that way, because if you're holding overnight, there's always the inherent risk, right, of something opening up really against your position the next day. Say you were short this at the end of the day. I mean, it could open up at 350, for God's sake. Anything can happen, right? It could also open up at 300 tomorrow. It could. Unlikely both of those scenarios happen, but it could. Okay, so whenever you're holding a little right, you are taking on. You may say, well, I've got to stop. Say for example, you're short here, 322.15. So you got short at Qs today. So you know what? I'm gonna share size so that my stop is at $328, so I'm risking $6 per share. So I'm willing to risk $60. I'm buying 10 shares here at 322, or I'm shorting 10 shares, and there's my stop. Good. I'm only risking $60. You think as you go to bed tonight. You wake up tomorrow and it's at 336. So have you just now blown your loss limit on here? Right? You have. Now, typically there's a disaster plan that you can use to try to recover from something like this, because it does happen when you hold things overnight. Okay, and that's a whole other video to discuss later. But you basically get up and you basically have to take your stop. And what some people do, rookies do, is they add to their position a lot of times, thinking, well, I'll just average up and hope that it comes down at least to closer to where I originally had my stop, and then because I added to the position so much at a much higher price, my break-even point's a lot higher, so therefore I can get my money back. And they're worried about getting their money back. Do you think the market cares about your money and where you got in and where you got out? It doesn't. And that's another thing is people, say, well, the market came and got my stop. And they came in, really, you're 100 shares, you're 1,000 shares, you're even 10,000 shares on something that's doing a lot of volume? Obviously, if you're buying 10,000 shares of something that's trading 50,000 shares a day, then, my friend, you're doing that to yourself. You're allowing the market makers to take advantage of you. Hence, video 1 in the series where I talked about trade stuff that's doing enough volume so that you're in and out like a robber. You're a ninja, man. No one knows you're getting in. No one knows you're getting out. No one cares. Okay? So don't frame things in your mind that people are trying to game you and get you out of the system. It may seem that way. I know I went through that when I was a young pup trader, where it just seemed like ironic that my stop got taken out to the penny before it rocketed in my original direction. And, who's to say? I don't know for certain. I've never been a market maker, and maybe they have visibility to all those things. I would say in this day and age they probably do. And then you've got to be smarter than them and take advantage of watching the market more closely, maybe not putting in these orders to kind of sit there overnight so that people can pick them off. But typically with your small shares, if you're a smaller fish, even if you've got millions of dollars, you're still a smaller fish, in my opinion, with regards to the market. This is massive, right? Um, you've got to be able to um, beat them at their own game. Understand what's going on and make adjustments. Don't just be a victim. Okay, make adjustments. All right, I've kind of gone off on a tangent here in general, but this is all important stuff around the scanning. So we're looking for stuff with tradable voids. So since we had a weekday here, let's just go to the week stuff first. Let me do a couple of these. I don't want to make this video too. I'm trying to keep these videos short. Let's see, Capital One Financial. What do we got going on here? Here we go. We got this thing, possible double top on the daily chart. You've got it breaking down below the support point. You've got some support here at 156. Okay, but if it can get below this 155 point, it's got a nice clear move off this move down, back down to 152. Okay, so your counter trend, though, you're shorting something that's strong on the daily, stronger than most things on the daily and weekly. However, it's extended on the weekly, right? So if this is ever going to regress back to the mean of the moving average, how about now would be a good time for it to happen, right? So why not take advantage of it and shorten it for a day? So COF is one, for example. I'd just take a peek at the COF and its sister stocks, American Express, Visa. In fact, let's just do that right now. See what they're all probably pretty strong on the higher time frames, but here, American Express, lower high, a little bit weaker than Capital One Financial, got room to go lower, but it's again there's a bunch of garbage left, so it doesn't have the big tradable void that makes me happy. Visa has more of a tradable void below here. Okay, so Visa could be one you could watch tomorrow. Again, if the markets are weak and these credit card companies are also showing that they could be going lower. Here's Mastercard, if I can get the system to come up here. Yeah, another one extended down here, popped up. It's kind of rolling over a little bit. It's come down quite a bit. You see Capital One Financial is actually stronger than the ones I've just pulled up here in general on the weekly chart. It's kind of best of breed in this group, at least with the way the charts are talking right now. But this one's got moved lower here, right? It's extended down. I'd like to see it maybe chop around for a couple hours in the morning before it really settles in to try to take advantage of. So more of a late day breakdown type situation on these. All right, let's take a look at a few others here. Let's look at Match Group. So see, Match Group here on the daily chart, is really sloppy, right? Lots of garbage. But guess what? If it can break under this 200 period moving average at about $135, it's got this little blip of a V bottom here, and you can see it's a double V bottom on the weekly chart. That could give it some support, but you could look to short this thing on the bigger here. Look at the head and shoulder. Shoulder left, head, right shoulder, neckline. Where's it at? 130, right? About $130. Breaks the neckline, you could look to get short. Longer term on Match. Let's take a look at MU. People like the MU. Let's just kind of go down here, see. So MU's downtrending now on at least the moving averages have rolled over here on the daily chart. 60-minute chart has regressed back to the 4-8 period, so it's looking at an area where it could be shorted. It's tried to pop up today. It's failing. If we get a weekday in the market, this MU could have some nice downside. Let's look for void. Tradable void, not here. There's some chops, 78 support, 77 support, so it may not be as seamless of a move down. So MU is mildly interesting to me to the downside here. Let's take a look at Facebook. That one's jumping around here. 309.80. Facebook. Yeah, look at the tradable void here on the 60. Beautiful. Okay, daily chart still in an uptrend. Had the earnings pop here, came back higher low, regressed here to this again minor resistance area here to the left. Red day today. It's a tech stock. It's got room to run. I think if you like trading Facebook, there's no reason you can't revisit this one in the morning and see what's cracking with it early on. Target. It's also got a nice move up here. So it's really got nice room down to 204. It didn't really, it got hammered at the end of the day, but not to the level of actually it did. 3 bars on the 5. Yep. So it got hammered here at the end of the day, just like the others, to a new low for the day. You got tradable void to the downside. You got the same type of thing as the SPYs, where you've got a lower high, possible head and shoulders with a gangster lean to the right. Break point about 202, 203. Interesting to the downside. Target, throw JWN on there, throw Macys on there, revisit that retail sector, see if they're going to fall apart. Here's Macys, if I can get it to come up. I don't know why the 60-minute chart is all screwed up here. Very strange. Oh well, let's move on to something else then. Let's look at JPM. That's also on the financials. Okay, off a new high here today. Literally had a new high earlier today. Rolled back down. You see the weekly chart and the strong uptrend extended from the 20-period moving average. Just starting to break out here again. Um, got some garbage here to 161. This one's probably not one of my favorites to short tomorrow, although it has downside. And you check Morgan Stanley, Goldman Sachs, see what they're doing to give you some clues as to maybe if you want to be in this group sandbox tomorrow. Goldman Sachs, it looks a little bit better to me for a shorting perspective than JPM. And let's take a look at Morgan Stanley real quick. Too much garbage here to the left. Not a big fan. Plus rising 60. That 60 period actually looks like it's setting up for a long idea. Okay, so there's some ideas and kind of my thought process around this. Let's see if I can find out just a few more because I want to make this. Let's look at Apple. Everybody likes Apple. Well, not everybody likes Apple. That's kind of a strange statement to make. I like Apple products. I actually do not own this stock right now. Apple is, again, we're starting to get to a point where we're getting a crossover here with the 20 and the 40 period moving averages. 60-minute charts looking like it's short ready, even though we just had a crossover. We had a weak move here toward the low of the day. Do we have void to the left? We know we got some garbage here just at this price level. There might be some support, but if we can break under about 124, you got about $1 worth of area to move down to this area here, which is about 122, right, or $2 actually, where there's all sorts of support here to the left. So Apple could be watched if you like trading. It's not like Facebook. If you revisit these every morning, revisit them again tomorrow, see what they're doing, see what the market's doing from a strength perspective, long or short. Okay, just pause the video just to pull up a couple more because I'm going to wrap this up here because I think you're hopefully getting the gist of what I'm trying to get to you here. FedEx here, this is actually really pretty. Now, the negatives are if you're looking for a short opportunity on this FedEx, you are going against the trend on the daily. And on the weekly chart, technically you got a crossover here. It's middle pill, right? It could go higher, could go lower. I do like the fact that it's extended up. It did just break out on the weekly chart. And this aggressive move down, you got about a 60% retracement of that move from top to top, from tail to tail, topping tail to bottoming tail. This is the perfect time. If you wanted to get short, you'd short it. Now, another negative, it trades like crap. Look at the overlapping candles. I mean, it's just garbage. Typically, you get a big move, though. Garbage. Big move, garbage, garbage, garbage. Well, maybe the big move's tomorrow. Well, guess what? We got a nice tradable void down about $300. And it's a V bottom where it could break that and go down to the next one at 296. Weekday, transports are weak. FedEx, this one is one to watch as a possible short tomorrow. Absolutely, in my opinion. If you trade it. It's not, I've actually traded it recently quite a few times in the last probably 2 weeks. And it looks, day traded only. UPS is another one. I talked about this in the other video about how it's so strong. Same thing with the FedEx, and a lot of the transports are pretty strong. Look at the tradable void here on UPS. So I'd put these two on the way because if the market starts to go, these transports I think will start to roll over, at least regress, good God, to their rising 20-period moving average and not be so freaking extended. Look at the weekly chart here. So it'd just be a normal, healthy correction for these. But why not take advantage of the move down and short it intraday? And don't stay overnight. Again, I'm not short. There's no way I'm short UPS or FedEx overnight at this point. But I'll trade them, day trade them, and try to ride that down. Don't be discriminatory. Welcome all trading ideas. All right, I think that's enough. I'm getting up to 25 minutes here, so hopefully that helps. Hopefully that you get a good picture of how you're looking for voids, trends, and opportunity. And then, of course, in the mornings you're revisiting what's going on. So in my next video, I'll talk about what you're looking for in the mornings, pre-market, after you get this information from the post-market on your scans. So until next time, guys, have a great day. Trade well, trade to your plan, follow it, use the charts.